Hello, this is case one. So let me quickly go over the settings. So in the accounting app, obviously in this case, we're using United States of America for the physical localization, and then the valuation here has been tackled as automatic accounting. On top of that, we have the product category here. I created one called average. So there's an average costing automated. By selecting automated, Odoo give you this amount of GL account. So stock interim received is 110,200, different than interim delivered account. Okay, so start with case one. This video is for case one. My product is tracked by quantity. It's a goods. Cost is $0. The categories is average. And right now in the balance sheet, you don't see any stock inventory, stock account, or interim received account, interim delivered account. Now let's go through the process. We're gonna buy and we're gonna receipt. So don't worry about the date because the purchase order and the receipt cannot go backdated. So just knowing that there's a sequence. I did the purchase order, then receipt, then the bill, then Odoo adjusted. Then, and in this case, Odoo adjusted because the bill is a different price. As you can see, the bill is different price than PO. Then we make a sales order, then deliver the product, Odoo generate the entry, then we create an invoice, Odoo pull the correct cost of goods sold. So this is what I want to showcase. Purchase order at $100 is each quantity. So 100 times, it's 500. So 100 times 5, 150 times 5. So the total value for the bill is 750 rather than 500. Okay, so in here, I'm going to start with the purchase order. Today is February already in 2026, so I cannot reproduce what happened in the November. So let's remember the point here is the sequence. I buy quantity 5, each one is 100. Remember the product cost is $0. The moment I do that, whichever the version 18 or 19, the moment you receive it, all of the 5 quantity, the product cost, if you go back to the product, the cost automatically adjusts to 100 from $0. And then there is a report, which is an inventory report valuation. You will see that there's product 5 and 500 value. With the book means that this value does reflect in accounting. This journal entry look like stock valuation positive and then credit the interim received. In accounting for the balance sheet, I can see this two accounts being reflected. Now I'm going to create a bill for this purchase order before I sell it. Create a bill, and then you set a bill date. You can go backdated, but in this case, let's do the same. Otherwise, our accounting will be imbalance between February versus in the past. So usually the bill won't come before the receipt. If it does, it's called a down payment, which you will not use the interim received account, but a down payment account. That's a separate topic for this. So again, this is talking about the sequence. Bill happened after the receipt. So instead of 5 for 100, I'm doing 5 for 150. So 750 is my total. Now, you can see that, let's look at the accounting journal entry. Let's group by journal. You can see that there is, oh, right. So take a look at this 3 thing. So these 500 was originally created by Odoo when you receive it, and you create a bill for 750. But Odoo automatically create this bill for you, which is bill adjustment. to adjust the 250 to balance to zero. And then since your bill is a higher value than the purchase order receive, so we are respecting the bill by increasing your stock valuation, hence become your cost of goods sold in the future. If your bill is cheaper, if you got some discount and whatever, or maybe it's a credit note whatsoever, it will reduce your stock valuation account. So it will be debiting this account and credit this. So in the inventory report, you can see that in terms of the same product, Odoo increase the 250 value based upon the bill. Right now, your bill stock valuation, stock interim receive is balanced to zero. So that's completely fine. And you'll see the detail in here. This is the first entry, second entry as a bill, and you can see this account and this account is imbalance. What Odoo does is automatically adjust it by increase of stock and then offset this. So there's 250, 500 here, offset to 750 in the debit. Now, later on, we're gonna make a sell. Our sell, we're gonna, even though we buy 5 of them, we're only selling 1, but we're selling as a profit. So the sales price is higher than the cost, in this case, 250. So what I want to prove here is Odoo not only make the adjustment, our product cost also increase from 100 to 150. As you can see, it become 150. That's our new cost of goods sold. So you don't need to do anything. Odoo remember that for you. If you make a sell, and again, in this case, sell happen after the receipt and the order and the bill. So you can sell 250. The moment you confirm, and then deliver. Again, this is quite important to, usually the process is deliver, then invoice, rather than invoice before deliver. If you invoice before the delivery, please use the down payment rather than direct impact on the interim accounts. So now this invoice, the moment you confirmed this invoice, you will see that product sales income account. Oh, I'm sorry. Did I change it to? Oh. Not sure what amount price. Okay, that's I'm not sure why it shows 250 should be 200. Should be not sure why 200 should be 250. So, but forget about this. Not sure if it's a bug or something. What I want to prove is the cost of goods sold, which in this case, the expense or cost of goods sold are set on product category. So you can modify, of course. And that's case 1. And after you deliver that, your inventory report, valuation report, does correctly shows a negative 150. Also in the accounting, because there is a journal entry, so then it does reflect the stock valuation decrease now. So right now it's a $600 value, because we still have 150 times 4, and there's no interim delivery account because we invoice what we delivered. Thank you so much.